Welcome to the podcast, guys. I'm Joseph,
Hey, I'm Lee. Welcome.
and this is the Finance Matters podcast, where we share great insights about finance, personal finance, and investment things worldwide. Today, we're actually doing the second part of a series where we're looking at trading platforms.
Yeah.
Um, what did we do last week?
We broke down some the pros and cons, right? The hidden the hidden terms and conditions and just some general tips, advice.
Yep, 100%. And today we're going to do a little review of a film called Dumb Money that came out in 2023, which showed the story of dumb money or like, let's say the story of GameStop and Robinhood
Yeah.
during COVID,
2021.
actually.
Yeah,
So we're
2021.
going to actually go through a review together, and we're going to stop and share some of our points and thoughts, and hopefully it could be of value to you guys too.
Yeah. I actually like the title of Dumb Money because that's what the Wall Street guys give to the name to us small time investors, right?
Yeah, exactly. And honestly, sometimes we don't do just we give them reason to call us dumb money basically when when people start to invest with emotions,
Yeah.
right? But we'll get into that more. But we're not dumb.
Yeah.
We're trying to make sure that we empower each other so that we're smart money, not
Yeah.
dumb money.
Yeah, it's a good movie and it relates very closely to the actual events in 2021. I guess a lot of people kind of remember vaguely around then. I know I remember, but I didn't look into it so much. But yeah, there was a lot of people talking about what's going on with this GameStop and these platforms and Reddit and blah 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 blah. Yeah, so the movie actually is really good review. It's a good take on it.
Yep. And if you haven't watched the film, be aware there will be some spoilers. So if you haven't watched the film, I advise you watch the film before you watch this. And then obviously you can watch us afterwards, and then you can get a better feel from the investment side of things, or like personal finance kind of things, of what we feel are some of the challenges as individuals when we actually are investing and trying to grow our wealth, basically.
Come and watch Dumb Money, the finance film based off the book Anti-Social Network that recounts the events leading up to and the controversy around the GameStop stock rally of January 2021, when the stock for this struggling video game retailer reached astronomical levels, only to really have the rally killed by a series of suspicious and unfortunate events. Now, overall, I thought it was a fun movie. It's not at the level of something like The Big Short, which you can definitely see influenced this movie's style, but it was fun. It did a really good job of emulating the online culture around GameStop at the time. Ape Army and all the ridiculous memes that were circulating online. And also had a bunch of random fun facts in there, such as, for example, Steve Cohen, one of the hedge fund managers, owning a massive pet pig. Just kind of interesting tidbits like that. But at the same time, there was some messaging in the movie that I thought was a little odd or kind of silly at times, especially at the end of the film. And I know what you're thinking. Geez, another finance professional. The film really does lean into the really simple narratives around what happened with the GameStop rally when we have a lot more information after the fact about what really went down. So with today's movie review, I'll go over the major plot points of the film, explain the concepts that they touch on but don't really dive into, and also provide some outside information to give some of the scenes more perspective. Obviously, there will be spoilers up ahead, but the film is, for the most part, just based on the major events of the GameStop rally. So there's not going to be anything that's going to shock many people who kind of followed that whole saga.
So bear in mind, guys, what we're looking at is mainly Robinhood as well, right? Robinhood are the platform that a lot of these retail investors were using to make their trades, right? To
Yeah.
kind of rally GameStop stock. But it's also really good to understand the psychology of the whole saga as a point of like an educational point of view.
A quick flash of the future, the movie begins with an introduction to Keith Gill, who, outside of working at Mass Mutual, posts content online under the alias of Roaring Kitty on YouTube and Deep Value on Reddit, with his latest stock of interest being GameStop, a company that he himself has sunk $50,000 into because he thinks that Wall Street is overlooking the position and that it's undervalued, leaving an attractive opportunity. Another aspect here is that the stock is heavily shorted by companies like Melvin Capital, run by the main bad guy of the movie, if you will, Gabriel Plotkin.
So one thing that's really important to do in any kind of like investment thing is understand the fundamentals. If you're going to invest a particular stock, you need to understand why it's valuable, what it does, or like what the company, the stock is representing, right? What it does, how it's valued, um, its balance sheet, its liabilities, etc., etc.
Mm.
So actually, what Roaring Kitty did was actually really good. He
Yeah.
understood that. Um,
He did his homework.
he did his
Yeah.
homework, right? Um, but like to try and make an overarching story of like, oh, I'm now going, against the whole market. I'm going to change the world because of one investment. Maybe that's not what he was doing, but that's what it became.
Yeah. It's a huge risk on his part, but he was confident because he did his research and he was following it.
Yeah,
Like you said, balance sheets, etc. And he felt that it was undervalued.
yeah. And the thing is, though, other people started to follow what Roaring Kitty did instead of doing their own analysis, right, of the actual company. Now, where you go in and out of the stock is what you call technical analysis. So that's where Roaring Kitty understood that based on the value of the company, it's way below its investing like its valuation on the stock market, right? So he knew that going into it now would make sense, right? Now, the other people who started to follow what he was saying, you know, um, probably should have done their own research as well.
Yeah.
But
That
it's
was,
it's quite interesting how he started going online and sharing his idea. He created a good story arc. He made it attractive, etc., etc., and people followed his advice, which is
yeah.
not a
And,
bad
and,
thing. But
and this
from
is when FOMO comes into play again, like we talked about last time.
fear of missing out, 100%.
Yeah.
It's really important to recognize the different minor things that are happening and the different missteps that people are doing in the whole thing, right? From a personal finance perspective.
Mm.
Based on the real Gabriel Plotkin. Gabriel's been short on the stock since 2014, which just means that his fund makes money whenever that company's stock falls in value. I'll leave a link to a video in the description below explaining how short selling works, but just to save time, it basically involves selling the stock today and then buying it back at some point in the future, ideally at a lower price so that you benefit from the stock falling in value. But as for Roaring Kitty, he starts to gather a bit of a following, namely from more casual investors and traders. In the movie, they highlight three particular examples: a GameStop employee who hates his job, a single mother who's working as a nurse and is in a good amount of debt, and a college student couple who are likewise both buried in student loans. And as these people buy in, they sort of start this protest movement against the hedge funds that they're effectively betting against because they're bidding the stock price up and they're causing companies like Melvin Capital to lose money on their short positions. And eventually, this group of retail investors start talking about prompting a short squeeze, with the idea being that because of
Yeah. This is actually what I liked about the movie. Of course, it's based on mostly facts and a true story. However, of course, it's dramatized as well to make it a more interesting story,
Hmm.
and that's what it does well by showing these characters. You know, your average Joe kind of
What this is
middle
you trying to
class
say?
or working class students and that, and then up against these rich billionaires with their mansions and wine collections and all this. So I thought that it made bigger point for it.
Yeah, yeah. And actually, it's kind of interesting because if you look at those three people, the lady that was in debt,
Yeah,
the one that hated his job, and this college students as well, their reality at that point was not really great, financially speaking,
yeah,
and it's unfortunate and heartbreaking. But their habits got them to that space in the first place. And one of the critical things that people do in the stock market is think they can, like, what is it? Become rich and make money in the stock market. You can only grow money in the stock market or investing. All investing is growing money, not making money,
yeah.
right?
Not a quick rich scheme.
Yes, exactly. And you can see that this lady that was in 45K of debt, she was already in a very desperate situation. And so she was like, I need this to work. Is there anybody that can help me? And then Roaring Kitty comes in and has this great idea that could give her the results she feels she needs, whilst also fighting the big bad, right? The same with the students as well. They have debt, but they're also trying. They're just starting off a new life. They just want to be part of something bigger and greater than themselves. They actually get into a position where their emotions of like, oh, we have a chance to start something radical,
Mm.
and if I can also put my money in, whatever money I have, but getting other people to get like other students to get some money in as well, I could potentially clear all my debts as well and fund a great vacation, all this type of stuff, right? And then obviously someone that hates his job, like if you hate your job, you know, go, go try something else, try get some new skills to do something else, right? Um, you know, and it can be very important. It's very important to step back, to slow down, to speed up, and say, look, where am I really? And don't be too sensitive. Don't be too, what is the word? At risk to scenarios that could potentially be too good, right? And correct everything that you're going through. You know what I mean? Does that make
Yeah,
sense?
yeah, it's patience, right?
Yeah, it's patience and
Takes
also
time.
habits. It's really, really habits. Like you really should invest a plan, not a stock or anything like that. Invest a plan. But in order to have a plan, you need to have a strategy,
Mm.
goal where you want to go, the return you want as well, and for how long.
Yeah,
Very important to
exactly.
do this. And
Not
then of
going
course you
in
see,
blindfolded.
yeah, and then of course you see like um, this Melvin guy, right? These hedge funds, they have different pension funds within them that they're investing for.
Mm.
So their goal is always just to make money, make money, make money, make money,
Yeah,
or grow other people's money and make money, make money. So they're looking for any type of, let's say, deer, right, in the woods. Ah, look, that's great. We can bring that home. Boom, boom, boom. Just kill off everything. But then they don't really understand the implications it has on the
yeah.
overall market.
Yeah, by shorting and doing these things, it's good for the hedge fund to make money, which I guess is also can be good for investors as well. However, they don't stop and think about the employees or anyone of that specific company, right? That this means that people lose jobs and can't support their family, etc.
Yeah, yeah, yeah. These are just real life situations as well. So
Yeah.
it's
And
really
so
important
this
to,
is,
yeah,
yeah. I was just saying, this is what happened and what the movie is about. It's this David versus Goliath kind of scenario.
100%, 100%. And yeah, just kind of making sure we understand what the derivatives are, like shorting and options and all this type of stuff, is essentially just ways to provide more liquidity to the stock market, but also profit through the volatility. Okay,
Mm.
either you buy it short, buy it cheap and sell it high, sell it expensive, or loan the stock. Crazy term, but
Yeah.
you you buy it here to sell it later, or sell it here
Mm.
to buy it here, right?
Yeah.
So just a bit of jargon, but it's all about volatility, profiting of volatility, but also getting cash as well while you're in a position. So
Yeah.
that's just to simplify that as well. So
They can force some of these short sellers who are taking
yeah, and then basically he's kind of explaining the other side of the transaction. This guy, Melvin guy, he's trying to get the stock to go down more,
Yeah.
so he makes more money. But these guys here want to make go up, right? So they're fighting against each other.
Yeah. And this is risky on both sides.
Very risky on
Because
both
usually,
sides.
usually a hedge fund will do this, assuming that the stock is going to go down and down because they have to pay it back.
Yeah,
But if the stock starts going up and up, they start to lose their money.
yeah, exactly. And we'll soon get into like how Robinhood plays a factor in this whole thing as well.
Yeah.
And because to do so, they have to buy back the stock, they can actually cause this positive feedback loop where short sellers exit their position, thereby buying the stock, pushing the stock price higher, forcing more short sellers to exit, so on and so forth. And while the movie doesn't directly attribute the rising stock price to the short squeeze, we do see the stock take off. It rises again from under $10 to around $100, and later on in the film, even higher. That will lead to more stocks being purchased on the market. That will push the stock price higher, which will increase the demand for call options because, again, they're bets for the stock price going up. Now, there isn't really any evidence of a gamma talking and encouraging each other about this stock, and all of it being much the dismay of the big hedge funds like Melvin Capital.
How much did we lose today?
$1 billion.
Now, an interesting part to add here is that even though most people call the GameStop rally the GameStop short squeeze, and while there was short covering that happened, meaning that there were short sellers buying back the stock and helping to support the price, based on an SEC report that came out after the fact, the roughly 900% run up in the stock that we saw from January 19th onward wasn't actually the result of a lot of short covering. Most of the GameStop price appreciation was just coming from investors looking to go long on the position that made a killing off of the GameStop rally themselves because of their momentum trading. And likewise, there were a lot of retail investors who weren't really in it for the cause behind it, but were just speculating and trying to make money. With some data suggesting that retail investors were net sellers in the last week of the rally, albeit that data comes from Citadel Securities, ironically, a company that we'll touch on later that's pretty important to the story here. Now, throughout the film, as the stock price is rising, we do get a glimpse of the lives of the different hedge fund managers. It shows how filthy rich these people are, including with Gabe Plotkin buying up a neighbor's mansion to try and build a tennis court, which is based on a true story. We also see all the strong connections he has with other hedge fund managers like Steve Cohen at Point 72, in real life an actual mentor of his, and Kenneth Griffin of Citadel, another hedge fund. And it's very easy not to like these characters. They're very flippant with their wealth, very dismissive of the GameStop rally movement.
It's been up. Buybacks, retail traders.
And the retail investors in the movie are really not fans. At one point, Harmony, one of the college students, talks about how her father actually lost his job, which he had worked hard to get, because an investor swooped in and basically closed the company to sell it for parts.
One of these Wall Street funds came in and bought it, and Vampire sucked all the money out of it and then declared bankruptcy.
And to be clear, I'm not really here to defend the specific players or hedge funds in general. Some of them do use very aggressive tactics. But just to clear it up, short selling a company and betting against a company doesn't necessarily hurt the company's operations. What Harmony is talking about is something called corporate rating, which is actually a long investor strategy because you buy the shares of the company to then take it apart and sell it for parts, which Melvin Capital isn't doing. For the most part, if you're just betting that a company stock will fall, that doesn't inherently kill the business unless that business is looking to then issue more shares at that price. Because for the most part, the stock price is the price being paid between investors and doesn't actually influence the day-to-day operations of the business it's trading for. And funny enough, in that SEC report about the GameStop rally, they actually company
It's bullshit.
with Vlad Tenev, one of the bucks because of Robinhood. These to make money as a result. Their way around that a company is dying, so hedge funds look to make money as a result. Now, later on in the film, we're also introduced to the co-founders of Robinhood, the zero commission brokerage that a lot of retail investors use to buy stocks because it doesn't cost them any explicit fee to do so. With Vlad Tenev, one of the co-founders, really coming across as another villain in the movie. In an interview with a reporter, he's really skirting around questions about how Robinhood makes money, with him namely trying to avoid explaining payment for order flow.
There's also payment for order flow.
What's that?
We prefer the term stock order routing.
To quickly explain this, when a company like Robinhood gets a client order to, say, buy a stock, instead of sending it to an exchange to trade against another investor who's putting out a sell order, they can instead send it to an off-exchange market maker, which is someone who will then take the other side of that trade, selling the stock in question, and they'll make a bit of money by doing so because as a market maker, they make a bit of money on what's called the bid-ask spread, the difference between what a stock is bought and sold for. And because market makers make a small fee whenever they do one of these trades, they're willing to pay Robinhood a bit of money to route the trades to them instead of the exchanges, hence what's called payment for order flow. And importantly, at the time of the rally, Robinhood was making 1/3 of its revenue from Citadel Securities, a market maker that is owned by the same guy who owns Citadel, a separate hedge fund, Kenneth Griffin, who at the same time would have a stake in Melvin Capital, effectively bailing them out with a large investment when Melvin Capital is getting desperate with its short sale losses.
So I might need a new investor.
Consider it done.
Much to the dismay and anger of the retail investors.
So a lot there, but essentially, we were talking about last week. These trading platforms, zero commissions, etc., etc. It looks like it's free, but remember, if something is free, you're the product, right? But there are some fees that we don't see, right? And so that's kind of like the deception that that gets people, and actually you probably lose whenever you make a trade or investment
Yeah,
into a
they're
particular
not
stock.
charity,
Exactly,
you
it's not
know.
charity, right? And so, like, if someone was to use, let's say, a trading platform, right, a free one, you need to consider that the money that the actual bid or ask price that you're getting is actually wrong. So you should discount it higher or lower, right? And put that into your investment analysis if you're really going to do it correctly. But again, that requires work. That requires you doing the fundamentals of a company, understanding what it's worth, then looking at the technicals and see where it is. Then you could probably start and then discount wherever you are, either sell it higher or sell it lower than what it's really showing or whatever. So you get the price that you really want to. But most people don't do that, right? You have any thoughts?
No, I'm just agreeing that you need to go into it with a goal and a plan and invest for long term.
Exactly.
And like we're saying that when someone says it's for free or like there's no fees, yeah. It's the same as if you go to an exchange place wherever and they buy, sell currency, zero commission, but they're making the difference, right?
Yep, yep, yep. It's gonna be repeated all the time. Invest the plan, don't invest your emotions. Really, that's really the main message here. Understand if you don't have a plan, then don't do anything about it because you just lose money. In fact, there was this great video that I was watching earlier that actually explained that when you actually make a loss, let's say you make a loss, in order to get just to break even, right? You need to get like 50% more just in your next trade just to break even, right? So you make a loss for, let's say, $10, right? So in order to get back that $10, you need to get like you need to like make like a 50% return on investment on your next trade just to break even. That's not to make money overall, but just to break even. So you can imagine like when you start to lose money, you get into this psychological trap of being more risky, but actually to get higher returns on investment just to break even, and it can be a very bad down loop, if that makes sense.
And all these connections between Melvin Capital, Citadel, Citadel Securities, and Robinhood really sets us up for the big controversy of the film and at a higher level, the GameStop saga as a whole. Because as the stock rallies to $347.51 on January 27th close, up over 1,700% from the beginning of the month, on the next trading day, Robinhood freezes buy orders for GameStop, effectively killing the GameStop rally. As for how this happened, the night before, the movie shows Vlad getting a call from an accountant or lawyer, I'm not quite sure, but this person tells Vlad that the NSCC, or DTCC, I'm not sure which one they reference at this point, but that they're requesting a $3 billion deposit from Robinhood, which is more than they've ever had to deposit and is an amount that they simply cannot meet. Now, this is a part that the film really doesn't explain, but NSCC stands for National Security Clearing Corporation, and it deals with the settling of trades for brokers. This kind of gets into the weeds about how stock trading actually works and the infrastructure around it, but brokers work with what are called clearinghouses to make sure that stocks move from person A to person B and that money moves accounts accordingly. And part of the service, part of the everyday operation is that the brokers have to have a deposit, a margin of sorts, to cover any risks or losses associated with that everyday operation. And importantly, the cost of this fee increases with the volatility of the stocks. So because GameStop was experiencing unprecedented demand and price volatility, brokers like Robinhood suddenly saw this fee skyrocket to a point that they could no longer afford as a relatively small broker. And to be honest, I was pleasantly surprised to see this part included in the movie. Because obviously a lot of people just assume there's this massive collusion and that the only reason Robinhood stopped trading on GameStop was because the hedge funds that they had relationships with asked them to do so. But even with that, the movie still leans into that sort of collusion story. When Vlad finds out from his accountant lawyer person that he needs to pay this $3 billion, he asks about calling King Griffin.
Maybe this would be a good time for me to chat with King Griffin.
Seemingly to ask to borrow the money or to try and find solutions, with it sort of being implied that Kenneth Griffin suggested that he freeze buying on GameStop to solve their problems, because if they can't trade this stock, then they won't have to deal with as large of a fee for the extra volatility of that stock. And
So here you can see a lot of complexity here, right? That Robinhood, they're doing things for their own best interest, right? Of course, that's their best own interest is to make some money, right? And so it's quite crazy that even if you saw like if you looked at if I was a retail investor and I saw GameStop is really cheap right now, oh my goodness, definitely, but the fundamentals are really good. Okay, I buy that, but you should really have an exit strategy. Like, when do I want to get out from this, right? Because it's not just going to go to the moon forever and ever. Because that's just not what the company can do, right? So you should have an exit strategy of when exactly do I want to get out of this so I get the return on investment that I want, right? So fundamentally, that's one of the things that the retail investors didn't do correctly. They started to create up more stories because of the lack of understanding of collusion, of this, that, the other. Maybe there was, maybe there isn't.
Yeah.
And they just wanted to see the world burn, see the world burn, right? And now just gamble with GameStop to hopefully break down Wall Street, which is just a few hedge funds, right?
Yeah. And this
Um,
this all went to court as well in the end, and no one was ever found guilty of anything.
yeah, because there was nothing there
Yeah.
was nothing bad that was actually happening according to the
Yeah.
laws of the game.
I
But the
mean, if
thing
you
is, though,
think
the
of
people that did get burnt were the
yeah,
retail investors,
yeah, yeah,
right? The
because
billionaires will always have their billionaires, so they've done the work, they've done that, they've whatever, right?
and it's I mean with Robinhood, you can go against them and whatnot, but they didn't have the capital to or the to actually or have the liquidity, right?
Yep,
So
yep,
they didn't have that 3 billion.
yeah,
So it's kind of like, wow, what do they do?
100%. And so actually, what they have to do then, that platform, if they want to survive, they have to work in favor of the big people. They have to, right? And so when they're coming to you saying, "Oh, we're on your side. Here's a free platform," understand that when S comes hits the fan, they're always going to lean to the big boys because those are the relationships they want to be around
Yeah,
with,
yeah.
right?
And then maybe we'll talk about it, but then what happens when there's this freeze that people panic, right? They're like, what's going on? What's going on? Because if they're holding and holding and holding, this means the price is going up and up and
Yep,
up, right? And then if you cannot buy, you can only sell. There's something, obviously, retail investor feels there's something dodgy going on.
yep,
So what should we do? We sell, right? Because I want to sell quickly because there's something happening.
yep,
And then the people that don't sell, then the price has gone down. And yeah, it drops
yep.
very quickly.
And actually, it's funny because it wasn't just Melvin Capital, Citadel Securities, etc., that were the only hedge funds that were in this game. Because what happens is when other professional investors or traders start to see something happening, they follow along. It's called momentum trading. It's a psychological game because they also want to make some money. So they also want to create a quick buck for their portfolio, right? So they can get their bonuses as well, right? However, for the retail investors, they also have people that are momentum, people that, you know, the nurse, nothing wrong with her, the GameStop guy, and then they're also momentum people. So you have momentum people on the small side and the momentum people on the big side, all trying to chase each other and all this kind of stuff. But you have people who have done the fundamentals, right, and seeing that, oh, this doesn't make sense. So the question is, where are we, right, in any kind of like investment um, game, investment situation? We need to make sure that we're not those momentum people, and we actually have done the work essentially. We have a plan. And this is where actually I love to say this: understand the rules of the game, then learn to play it well, right? Don't play in a game that you don't understand. It doesn't make sense to do so. You actually hurt yourself and burn yourself.
Earlier in the movie, we're really primed for this outcome of collusion with the scene where Gabriel Plotkin is talking to his wife about how he's not really worried about the GameStop rally, even though he's losing a bunch of money, because in the past, we've seen exchanges and stuff work against these sort of rallies and really unfairly benefit the short sellers, with them specifically highlighting the story of Piggly Wiggly, which, if you aren't familiar, is a store that back in the 1920s was massively short sold, and the founder tried to prompt a short squeeze by borrowing a bunch of money to buy up shares of the company, with him ending up with 99% of the stock. It caused the stock price to rally, and eventually the exchange actually intervened, freezing trading of the stock and forcing the founder to liquidate his business to pay back the loans that he had taken out. And so when we see trading for GameStop frozen, obviously the retail investors are pretty angry.
But Wall Street cheated. Surprise, surprise.
But again, to be an annoying stickler, I want to add a few points here. For one, Melvin Capital did still go under, even with this sort of intervention, if you will. And secondly, while there were clearly material conflicts of interest between Citadel Securities, Robinhood, and its relation to GameStop, given that Citadel, the hedge fund, obviously had an interest against GameStop, I do feel it's important to highlight that Robinhood wasn't the only company to freeze trading on GameStop on January 28th. There were other brokers, including Interactive Brokers, which itself had a very small dealing with Citadel Securities. And on top of that, GameStop wasn't the only stock to be frozen. There was also AMC, Bed Bath & Beyond, and other highly shorted companies, yes, but also companies that were experiencing significant volatility. So while naturally you do have these conspiracies about how short sellers influence all these brokers to pause trading and to try and kill these rallies about these stocks that these people over here had an interest in, to me, there's just an easier explanation with the technical failures that happened because of the unprecedented volume. For example, one company's exchanges, because we don't have concrete evidence one way or the other about collusion around the GameStop rally, I wouldn't conclude that for sure there was nothing suspicious happening, but the movie really assumes that collusion did happen. And in fact, towards the end of the movie, we have this big aha moment where they highlight that despite Kenneth Griffin saying under oath that he did not instruct Robinhood to pause GameStop trading, that it was revealed in a lawsuit that followed that there were text messages between Robinhood and Citadel the night before the GameStop trading freeze, which I don't really find to be a smoking gun. It's not surprising to me that two companies with business relationships that involve trading securities were messaging during this crazy phenomenon. And we've since seen some of the specific messages, and none of them are really all that damning. We also, towards the end of the film, get to see how some of the retail investors made out.
And this is really, really important. Some won, some lost. And that's really the reality of like investing. Like, you're investing is growing money, but there are losers here. You're taking someone's resource and moving it to someone else. There has to be a loser in this situation, right? So that's something that really people need to kind of understand.
Yeah.
With some of them making a bunch of money and others being in a slightly better position, but really having missed the biggest opportunity to change their financial situation. And the closing scene is Keith Gill running naked on a track. Some added detail. As for my overall kind of view of the film, again, I did enjoy it. There's some messaging in it I didn't really care for. The whole thing ends on this really triumphant note of we did it. We showed the hedge funds who's boss. The retail investors banded together, and we made a difference because now hedge funds pay attention to what retail traders are talking about online. It's like, okay. In reality, we haven't seen really much change in the industry. And GameStop is actually, while still above 2020 levels, trading significantly down from its peak, which likely means that based on the massive volume we saw in January, a lot of investors are down on their positions buying into the rally. And while I understand the criticisms of short selling, especially given that some people do so maliciously, less short selling activity as a whole, as the film kind of celebrates, isn't necessarily a good thing. It does play a role in deflating asset bubbles, and some research actually shows that it improves market liquidity, which makes trading cheaper for investors. And I know this really cements my position as a party pooper, but I really didn't like how the whole film really glorified what's blatantly bad investing. If people want to buy a stock for a cause or for whatever reason, all the power to them. That's their prerogative. But the film just really shows a lot of retail investors doing dumb stuff with their money. Jenny the nurse talks about how Wall Street talks down to retail investors, calling them dumb money, only to then turn around and pay for a vacation on her credit card because she doesn't want to sell her GameStop shares, which are, I think at that point, worth nearly $500,000.
And that's crazy.
Yeah, that's
crazy.
amazing.
That tells me that the reason why she was in a bad situation before wasn't because of, let's say, the market or Melvin Capital or Robinhood or whatever. It's because of her lack of
Financial
education,
literacy.
right? You don't use a credit card to go on holiday,
Yeah.
right? then and then you actually have a position where GameStop is at 500,000 and you don't sell
Yeah.
because you feel it's going to go to the moon.
Yeah. I mean, the question, I mean, I think that's when we talk about glorifying it a bit with the movie, dramatizing it, because I'm sure most single mothers out there, if they had 500,000 in their grasp, that they would take it.
Yeah, well, you'd hope so, but the thing is that
Yeah.
like the psychology is that when you've got 500,000, you think, but wait, it might get a million.
There's going to get more. Yeah.
Yeah, yeah. I so want that. I can hold it. I can hold it. I don't mind paying a bit of debt here just to, just to let
Mm.
it keep going, whatever, da da da.
Yeah.
Again, it's emotional trading. We're
Yeah. Yeah.
emotional beings.
It's gambling, you know?
It is. It really is. Um, and that's really that's something I really don't want people like us normies to, um, you know, uh, be what's the word? Be deluded by in terms of like thinking, you know, we can we can beat the big guys and we can join in something and eventually we're not really doing that. We're actually just helping them eventually and hurting ourselves even more, you know.
Yeah.
Um,
Yeah.
but I'm curious to see where the other people are as well.
Some characters are also trading options and taking on a lot more risk there because those are much more complex securities. And you can really see how people are treating GameStop like a lottery ticket. So it just feels like it's important to highlight that you really shouldn't get emotionally attached to companies. I really don't like seeing that cheerleading or overhyping about a position, saying that we're all going to make it or whatever, because it's usually the financially desperate who are convinced by the messaging who end up losing in the end. And I know I'm really coming off as a buzzkill with all this, but as someone who works with people trying to sort out their finances, I just felt like I had to get that off my chest after watching the film.
And he's correct. So
Yeah.
he's really correct there.
Yeah.
You know, like like it's you have to invest a plan. Like you need to invest a plan. You need to have a plan why you're doing so. And if you haven't even first put yourself in a position where you're financially secure, where you have some savings as well, you have some insurance for some coverage if something bad happens, you shouldn't even really start playing with something like playing with investments, right? Just do level 1 first before we do a level 100. Level 1, level 2, level 3, and those journeys through level 1 and level 3 will give you the capability to handle level 10 situations, right? If you haven't learned how to handle those level situations, you're not going to be able to understand all this type of stuff, you know?
Yeah. Patience, going for the long term.
Yeah,
And what I did like about the movie, though, it helped explain what actually happened, and it has happened in the past, and it'll probably happen again. And it was just a more simplified way of educating people on how these things work,
yeah, yeah, 100%. It's
which is good. It did the job well in that way. Yeah.
no, actually that's what I do like watching these films,
Mm.
just so that it helps me understand, okay, what is my psychology here? Like I'm watching the film, getting into the emotions, etc., etc. But am I thinking? Am I a thinking person?
Mm.
Have I put myself in those kind of situations where I could be, investing in my emotions, right?
Yeah.
So, so shout out to Plain and Simple, great channel for doing that review, getting into all the weeds of things, breaking that down, giving us the ability to actually do our own review on what he had talked about with the film as well.
Yeah. Yeah. But it's a decent movie. You know, explains what happens pretty well. Has some good characters in it. But yeah, it's just a emphasizing that kind of David and Goliath thing, and he was right at the end. It didn't really prove that much, right?
Yeah,
And some people won, and a lot of people didn't. And again, like you said, it comes down to financial literacy,
yeah,
you know.
yeah,
And unfortunately for them, for the retail investor, when they're thinking about these big Wall Street guys, they're quite educated
yeah,
when it comes
yeah,
to finances.
yeah. The gap between them and
Yeah,
us is really like education,
mm,
and understanding actually how some of these complex instruments work. You
yeah,
know, um, and that's gonna be, and it's actually quite interesting because recently, I think even last year, GameStop, there's another rally happening again, with GameStop as well. Yeah, maybe not. I mean, I don't think they'll be using Robinhood again because the retail investors lost trust in them. They went down as well. So they were stupid as well. Understand their stupidity. There's dumb money everywhere. He was also gambling because he wasn't doing he wasn't like, he was looking for a quick buck so
Mm-hmm.
that he can justify his returns, so he can get a bigger bonus, so he can attract more customers to his hedge
Yeah.
fund, so to bring them more capital, so he can boost his
To
net
build
worth, etc.,
another
etc.
tennis court.
Yeah, build another tennis court, maybe get another pig, or maybe have a farm in his house or something like that. So, look, just really the message again: have a plan, have a strategy, do level 1, level 2, level 3 up to 10 before you start doing level 100.
Yeah. And don't get caught up in the hype.
Yeah, don't get caught up with the hype.
Stick
And
to
like,
your plan.
yeah, understand, like, be able to see that there is a hype. You know, I think someone said, I think one of these Rothschilds said, um, when people are, hold on, what's the word? How do you say it? I think it's even Warren Buffett actually. When people are partying and having a great time, he sells. When people are in tears and crying, he buys.
Yeah.
Right? So he understands psychology, human psychology, and he uses it for his benefit, right? Not to say that's a good thing, but understanding that overall human psychology is what drives most of the market sometimes, and it's very, very important to not be emotional, or you're going to be part of the losers in that whole scenario. So that's just there. But
Cool.
yeah, but
Hope it helps.
thanks for listening. I hope that helps as well. Yeah, I hope that's
Yeah.
added value.
You
And
can go watch it.
yeah, go watch it.
Have your own
Yeah,
opinion on it. Let us know.
100%. And if you want to watch the review, we'll also put that in the description down below as well for yourself. So you can actually watch that as well. So you get more details. Because I know we skipped through some bits and pieces, mainly because we didn't have the time to go through all the complexities that happened there.
Mm.
Awesome. Great. So we'll see you now. We see you now for another episode. The third part of our series is actually we're going to have our own expert come and share more insights about trading platforms, how to use them, how not to use them, what to consider, what are those other fees and other things that we don't see as retail investors, and then learn what we can do to make sure that we're more secure. So with that, have a good one.